So one of the major problems that first-time buyers have in getting onto the property ladder is saving towards the deposit. The minimum deposit is normally 5%. In fact, there have been periods where it's been more than 5%. Of course, especially this is really bad for people who are renting because you're paying a big chunk of your disposable income out on your rents, and that makes it even more difficult to save for that 5% deposit. The good news is we now have access to a product designed to meet those needs, and in this video we're going to go through some of the lending criteria and what you need to do to qualify. So the first thing to say that this is a product designed specifically for first-time buyers, and that is a strict definition. So you can't have owned a house 5 years ago with an ex-partner. You do have to genuinely be a first-time buyer. It's also designed purely at people who are renting. Okay, so you've got to be able to evidence that you've been paying your rent for the last 12 months. So living at home with parents or living with family and friends is no good to qualify for this particular scheme. The third thing is, as well as the normal affordability criteria, which is your multiple of salary, they're also looking at the mortgage payment can't exceed the rent that you've been paying. So that's the whole idea of this scheme, is that you've evidenced that you can be paying rent. So therefore, the mortgage payment has to be no more than that. So yes, you will need a good credit score in order to qualify for this particular mortgage. They're going to be quite strict on that, so as well as proving that your rent has been up to date, you can't have missed any payments on your credit commitments or even your mobile phone bill in the last 6 months, and you've got to get through the lender's credit score as well, which sometimes isn't easy. So yes, you can buy practically any property using this new scheme, even new build houses, but not new build flats. That is the one exception, and you can't use it in conjunction with any other scheme. So if the government launches anything else to help first-time buyers out, unfortunately you won't be able to take advantage of any of those things either. The key thing in terms of properties, though, remember, is that the mortgage payment can't be more than the rent you've been paying. So finally, on the lending criteria, there's the household to household rule. So what this means is the people who've been paying the rent have to be the same people applying for this new mortgage scheme. So if you're renting and your partner's living with parents, unfortunately, you'd have to apply for the mortgage in your sole name, not using your partner's income. So in terms of the eligibility, each applicant must be a first-time buyer aged over 21. You don't need a deposit. Actually, you could put some cash towards it if you wanted to. You've got to have a good credit score. It's not okay to go for a new build flat. And finally, the key thing, you've got to prove that you've been paying your rent and that rent can't exceed the new mortgage payment. So there we have it. 100% mortgages are back, but it's certainly not back to the bad old days of the risky lending. This is a product that's designed for a specific demographic of people that have evidence that they can pay rent and therefore they should be able to afford a mortgage payment as well. If you'd like some advice or you've got some more specific questions for us, please don't hesitate to get in touch.